I'm going to bring in now from Heritage Capital, their president, Paul Schatz, along with Nicholas Wealth Management's David Nicholas. David, initially the market drifted a little bit lower. It quickly turned around, rallied big time. Then that started to fade a little bit. Throughout all of this, the bond market has been calm. I think Jay Powell's looking a little brilliant right now, but what are your thoughts?
Yeah, well, he may look good in the moment. We'll see if the history says that he was right. I think what it shows is that anyone that tries to fight the Fed just ends up losing. So I think it really is the market saying that the market feels the worst for inflation is behind us. But I think it really matters where are we seeing inflation. We're seeing it in areas that were hit the hardest last year, right? Travel and leisure, and entertainment, and the travel. So those sectors, as they come back, sure, we're seeing inflation. But if we're only seeing it in those areas, that's not going to be enough for the Fed to change course. But I think we have a real problem for wages, Americans that are making under $20 an hour. We're having a real problem getting those workers back to work. So I think that it's still going to unravel. But for right now, the market says the worst is behind us.
And to your point, airlines up 24% year over year, used cars 29, let's call it 30% year over year, bicycles up 10% year over year, and the list goes on and on. Things like that, moving and storage 16%. So Paul, I mean, are you making any changes? I mean, are you listening more to the bond market, or are you still as anxious right now as the stock market?
Well, I think first, anyone who's reacting on a single data point, you're always chasing your tail. The time to start worrying about inflation was last summer. 10 months ago, we started putting on part of an inflation portfolio. And we've incrementally increased that over the course of 2020 to benefit from the trends that began, 10 months, actually began 12 months ago. So would I make any changes today based on a super hot 5% and 3.8% core? I wouldn't. But what I would do, Charles, is there's been a theme during the year. The theme is of cyclicals. It's materials. You know it. It's industrials. It's energy in a big way. And it's materials. So the key is, and banks. So into weakness, you want to buy this stuff. At the same time, you want to make sure you're not saddled with staples and utilities and things like that aren't going to do well until the economy slows, inflation decelerates. But I would buy. Banks have been pulling back, maybe a little bit more on the pullback, and then I'd add to banks. Big cap tech, to David's point about the 10-year bond. Big cap tech is supposed to go to all-time highs. When you've got the 10-year now is well below 150, on its way to 140. This is, if big cap tech's going to get going again, and I think it's a trade, not an own, a quick turnaround, big cap tech is supposed to go now.
All right, so you know what, David, if that's the case, maybe it is happening right now. At the start of trading, when everything reset, sort of that initial pullback, the NASDAQ took the lead. A lot of those sectors that Paul just mentioned are losers today. He says buy the weakness there. But what do you think? I mean, this whole growth, this value pendulum debate, where are you on it right now? Particularly keep in mind, the semis look great on this big package coming out of the Senate also.
Absolutely. Yeah, cyclicals are turning over, right? Housing's turning over, transportation's turning over. But it's interesting, energy's heading higher. I think there's a really interesting setup right here for energy. There's a lot of political factors at play. So I like energy, but I also like tech. I mean, a 10-year under 1.5 is going to bode well for tech, so especially companies that have strong balance sheets. But I do like the semis. We own NVIDIA. I think it's the best of breed. I mean, they're dominating the semiconductor market. I mean, they've done a lot with the auto industry, data centers, AI. So I think if you're looking for names like NVIDIA, I think it'll do well regardless of where the 10-year hits. But certainly if the 10-year can stay in that 1.4 to 1.7 range and below, I think tech's going to have a fantastic run over the next few quarters.
It's acting pretty good, and I got to tell you, I'm a little frustrated with some of these other names. I know you get spoiled, right? But they're coming out pretty hard. We just had on the screen some of the material names, but let's see what happens there. Guys, thank you both very much. Always appreciate when you're on.